All right, guys. We are here today. It is Friday, non-farm payroll day. Honestly, today's absolutely massive in terms of economic reports. We've had economic reports essentially all this week, but today's day is the biggest report this week by far. Like today, we have the payroll report, which is massive. It's expected at 164K. That's kind of the neutral level. I see some people asking me about what would be considered neutral. I don't really know. We don't really know how the market's going to respond no matter what. If nothing's definitive, I guess. But 164 is the neutral expected number. And so that's what we're going to look at, I think. And yeah, today, non-farm payrolls, guys. I'm excited. Honestly, today's the biggest report of the week. And we are here, as we always are. Yeah, let me get everything working, scrolling on the screen. There we go. Hey, what's up, Sai? The stream lagged? Did it really? Yeah. Honestly, it's been such a busy week. It really has been, man. I'll put this up. It's been such a busy week, man. It really has. It's a lot of stuff going on. You know, yesterday we had prelim payroll numbers. We had jobless claims, unemployment. Wednesday we had the JOLTS report. Tuesday we had manufacturing and services PMI all throughout this week too. So we just got a lot of stuff. What's up, Sai? Thanks for your live streams, bro. It's nice to share ideas and interpretation of what goes on when news hits. Yeah, thank you, man. I appreciate it. You know, I had one goal of this channel when I first started, which was to kind of be like an anti-guru. You know, I've seen a lot of people start to kind of do a similar thing, but I wanted to be an anti-guru. I didn't want to be some guru out here slanging courses to you guys. Like, I would rather be honest, and even if I'm wrong about stuff, I try to be honest about it. Now I think I'm a good trader. I think I'm today's the biggest report. I think I'm right a lot, believe it or not. Like, again, a lot of the guesses that I have on the stream end up being correct if you actually pay attention to them. But regardless, some of that is just purely luck, to be honest. But yeah, thank you guys. Appreciate the love. Yeah, a lot of people talking about gold. You can see the SPY and NVIDIA are both down today. We could look at gold. Gold is sitting up there at 25.50 or so. I thought somebody was acting like gold was falling. Gold is close to lifetime highs here. You know, lifetime highs on gold is right around here, I believe. We're only like $10 away, I think, from lifetime highs. Let me see. Yeah, lifetime highs is 25.70. So we are $20 away from lifetime highs on gold. $20. So we're very close to lifetime highs, actually, on gold. Here's lifetime highs right here. I will put something up, make it green for highs. There you go. So yeah, this is lifetime highs on gold. We'll see if we hit it or not, but we're getting close. And again, the SPY is down today. NVIDIA is down, gapping down a little bit. Does today's report determine of the rate cut coming in a few weeks? It might influence how much of a rate cut. I think we're going to cut rates no matter what, based off of relatively decent inflation data that we've seen over the last couple weeks, right? We've had good PCE data, good CPI last report, good PCE data. Payrolls were a little bit weak. And so all of that stuff means that the prelim payrolls are a little weak. I'm assuming that we're going to come in under the expected number today. But again, it's never a perfect thing. Like yesterday, if you look at what happened with the, you can see the prelim payroll numbers and jobless claims numbers. So jobless claims, like looking right around here, right? Jobless claims showed up lower than expected, which signals more jobs than expected, more people working. But if you look at the actual payroll numbers, U.S. ADP national employment numbers, 99,000 for August, you know, 50%, or 33% less than expected, roughly about 35% less than expected. So yeah, definitely under the expected numbers here for payrolls. Yesterday, Now, it doesn't mean today's numbers are necessarily going to be under that as well. I've seen it happen where we have very low payroll numbers and everybody thinks they're going to be weak for non-farm payrolls, and then NFP data comes out and it's higher than expected. So it doesn't it's not always a predictor, and you can't bet on weakness in employment change numbers for payroll numbers. So yeah, I really don't know. I'm speculating. I always try to be careful with making any type of big bets. Yeah, I'm gonna do a poll. Does today's NFP report come in higher or lower than the 164K expected? Higher, lower. We also have unemployment data today. Yeah, I'm just going to do two options. I was thinking about doing. All right, yeah, so today's NFP report coming higher, lower than the expected number. What's up, Jeffrey, Jan, Raven, Pawn, Ed, Paulino, William, No, Michael, Pawn, Druv, Chocolate, Crash, Con, Psy, Z, Adventures, Sam, Edmund, Ranges, Frostbite, Rojas, Coffee, Jay, MA, Corey, Jerry, Benny, Damon, Debbie, JP, Freddie, Alex, Lynx, Show, Biggie, Justin, Hoff. What's up, guys? Good morning. Good morning. I hope you guys are all doing well today. I appreciate the love. Appreciate you joining me early today. You should make the poll with 4 options. I don't know. I think the unemployment report's important, but the payroll report's more important. I'm not gonna say more important. I would say more influential. Is the Nasdaq 100 selling? Well, I mean the Nasdaq's down, the SPY is down. It's mostly driven, if you look here, by Nvidia specifically. So if you look at this, Nvidia is down. It spiked up yesterday at the open and then came all the way back down to 105.5. This morning is where it's sitting. It went under 104.50 for a second too. But this is such an influential thing over markets that it's going to drag the SPY down. It's going to drag the Nasdaq down. Gold will probably go up. So, you know, crypto down too. Yeah. Gold. Yeah, a lot of people have been watching gold. But again, today, the expected number varies. Some people are showing 161. I'm showing 164, 163. Last time payroll numbers showed up at 114K, so much less last time than they're expecting this time. And then next week's pretty big too. Next week we got CPI and PPI data Wednesday and Thursday, so those are getting pretty big. Last week we had GDP, durable goods, Case-Shiller data, PCE data. Yeah, Broadcom. How did Broadcom do for earnings? I know they had earnings. Looks like they're down pretty big. After what pushed up? You lost 80% of your account, but then you're trading way too big, brother. You know, like 0 day to expiry options using huge size of your account is incredibly risky, man. You know, I always tell you the biggest thing that you can do to protect yourself is just trade small. Like, you're not going to get rich trading. Like, again, I would be careful. I think you're probably gambling a little bit, Raven. No offense to you, but if you're risking 80% of your account in very short-term options, you're gambling, brother. I think you might want to take a break. You know, no offense. Trying to help, genuinely trying to help. I think if I was going through that, I'd probably want somebody to tell me the same thing. Hey, what's up, Beach Bum? Yeah, Jolt's number was down too. It is Friday. Happy Friday. Should we be expecting a reversal before the big pump? I have no idea. No idea. John is the voice of reason. Yeah, sometimes people don't want to hear it though, you know. Like sometimes they get mad at the messenger. Yeah, AVGO had earnings yesterday. They came in at yeah, AVGO earnings came out yesterday. Yeah, I'm looking at AVGO. I'm trying to see what their numbers showed up. AVGO posted. Broadcom was. Benchmark reiterated a buy on Broadcom, maintained a $210 price target. Broadcom posted third quarter revenue of $13 billion. They posted quarter four guidance revenue of $14 billion, adjusted EBITDA of 64%. EPS of 124, beat 120 estimates, sales beat expectations as well. So Broadcom did pretty good. I'm not sure what they were expecting for guidance, but maybe weaker guidance. They said, quote, we expect revenue from AI to be $12 billion for 2024, driven by Ethernet, networking, and custom accelerators for AI data centers. Top 3 voices of reason in the world right now. What about being 100% all in on NVIDIA? So your entire portfolio is in NVIDIA. I think that's a risky portfolio too. Up to AI guidance, everything else in the biz was basically bad. Hey, thank you, man. Thank you, Daniel. Top 3 in the world for sure. Yeah, so Tesla all the way up to 230 plus yesterday. 235s is what we hit. Exactly 235s. What's up, Steve? Hear about the investigation of NVIDIA? I heard rumors of it yesterday. It's hard to tell what it is. Bad jobs report. I don't know. What do you guys expect here? Looking at the poll numbers, 51%, 52% think higher, 49% think lower. Yeah, I don't know. We'll see. Again, AVGO down big. This is kind of influencing all of tech, I would say. All of tech's basically down. Here's Tesla up to 228. So get NVIDIA down, SPY down. So a lot of tech is just down today. Could be from NVIDIA, could be from Broadcom. What's up, Sam? Is this a report they can revise later like the other reports? Yes, this is actually the report they revised. So if you want to know, the report they revised like a week ago is the same report. Market is down way too much. Non-farm numbers will help the market a little and then flush. Maybe. That's what I thought the other day, and that's exactly what happened. And that's a pretty common thing, right? If you guys remember what I said here, right? So after this big drop day on the 3rd, so what was this? Tuesday? Wednesday? Yeah, Tuesday. So after Tuesday, what happened was originally NVIDIA dumped really, really big. You can kind of see these massive drops on Tuesday, right? What we said Tuesday, or what we said the next day on Wednesday morning, is that we thought the market would rebound for the first half of the day, just based off of this deep extension. Like you look at NVIDIA down over 10%. Short term, and so NVIDIA was down over 10%. What we told you guys is that we thought that just based off of this big downward extension that we would probably head up a little bit from profit taking or whatever reason you want to think that we head up extension on the downside. And so usually when we're that extended short term, we go the other way for a little while at least. And that's exactly what happened. We ended up going right back up. And then I even said that we might turn midday and start coming back down. And that's exactly what we did. If you follow this, we turned midday, started coming back down, and then, you know, I've basically been slightly down since then. So That's usually a pretty good, like a pretty common movement pattern of markets. Payroll data has no impact of Bitcoin. I might move it a little bit. I mean, Bitcoin usually follows macro markets to a certain extent, and payroll data move macro markets. So, I mean, it might follow it a little bit. I'm not going to say it's going to go up 10% or something crazy, but it could. I don't know. Hello, guys. I'm a new trader, and I come now. I would like to ask, how do you see today's news? Is it negative or positive? It's neither. We don't know. It depends on what the numbers show up as today. It's not like we can just label this good or just label it bad, right? Like, we don't know which one it is, right? We have to wait for the data to come out first. We have to wait for the report to drop. We don't know whether it's going to be a good report or a bad report. Nobody freaking knows. We just gotta wait. All right, let me get a timer up. We got about over an hour left. We already got 500 people here, so that's great. Appreciate you joining me here, chat. All right, so there we go. Yeah, we got about an hour left. Is there any way to know the data in advance? Get a job at the Kansas City Fed. You know, take Jerome Powell's job. And then you might, but it also would be illegal to profit from it. So, you know, yeah. It'll be whatever the Fed needs it to be. Yeah, for sure. The Fed's generally pretty balanced. The last time the payroll data showed up noticeably lower than expected. I don't know if it was lower than expected. It was noticeably lower than they were expecting this time. Last time it showed up at like 113,000. Today they're expecting 160s. So I wish it would start earlier. I'm good. I used to start really early. The problem is, like, we get a couple people there. We get a couple hundred people there. But, like, ultimately, I pushed the stream back about an hour from where I used to start. And my numbers have been way better since then. You know? Like, at this point, we start the stream up. We have 500 people in 10 minutes. And so that's just different. And I would rather it do that. Plus, it's kind of hard. Like, I get up. To start the stream where I used to, I would have to get up at like 4:30 in the morning. No matter how much sleep you get, by noon, I'm falling asleep on those days. Like, it was tough to function. You know, I feel much better waking up at like 5:30 in the morning. Yeah, I'm in Texas time, so right now it's 6:30 in the morning. So I get up at like 5:15, 5:20, 5:30. It's a lot easier than getting up at 4:30. What about gold? Well, gold has been... People hedge. Gold is a little bit trickier to predict. You know, I tell my wife this a lot, and I try to make sure people understand this. What I'm about to say is that gold can downtrend for long term, right? So gold could downtrend for 5+ years if it needs, you know, if it's extended on the upside. And so the problem with buying gold here, where we're at currently, is gold looks like this over the last 3 years, right? So gold has done this in 3 years. And so for me personally, gold, number one, needs to be a long-term hold. It's not a swing trade right now. It's not something like we might break highs, but who knows how much higher we're going to push past that. But for me personally, gold's just not a swing trade right here. I think gold is too extended on the upside. And to clarify, it might go up. It might continue rising and break highs and get up to 3K. I don't know. What I will say, though, is that it's already up a lot percentage-wise. In the last year, it's up like 25% or more. And so buying it here is risky short term, meaning like it's possible you buy it here and then it corrects for the next 4 or 5 years and you're stuck in a downward trending asset for 5+ years, right? That's very possible. Why? Because we've been pushing up a lot the last few years. We're up 25% in the last year. This is just not the time to buy gold. In my opinion, the time to buy gold is there's a few times. Number one, if you genuinely predict massive like economic weakness, gold is a hedge. You could buy gold in those situations, and maybe that's what we're getting here. I don't know. That's a little bit. If that happens, gold might continue to push up, right? So if you think we're gonna hit a recession, you know, gold might be a good buy. I don't know. I'm not telling you to buy it. I have no idea if it's gonna go up. But again, the problem is it's been breaking highs over and over again for the last year. That's generally, according to the chart, not the best time to buy it because you can get stuck in, you know, long-term downtrends. Here's a monthly chart. You know, like say you bought gold. It's kind of like the equivalent of buying it up right here. Say you buy gold right here, right? Like you buy gold in 2010, you're gonna downtrend until freaking, you know, you're gonna downtrend until 2017 for 7 to 8 years. You're gonna be holding a super depreciating asset that literally dropped almost 50% in that period of time, right? And so, does that mean we should buy gold when it's breaking highs? I don't know. I think the time to buy gold is during this period here. So if you want to buy gold, I know it's hindsight, so it's really easy to look at this in hindsight and say, hey, you should have bought here. And so take that context into it for sure. But the time to do it is the dollar cost average into these periods when it's pulling back for years and years. Like dollar cost averaging into gold in those periods of time makes the most sense to me. And so if I'm buying gold long term, and now I'm not saying you shouldn't include a little bit of gold in your portfolio, but for me, I'm not putting everything into gold, not unless I'm holding for 30 plus years, right? But I think 30 years plus is fine, and you're going to make money in gold most likely if you do. But there are some risks, and the risks are if online money takes off, if cryptocurrencies take off, if digital finance takes off, you could argue gold's going to get less and less valuable. I'm not saying I don't even believe this. You know, I don't necessarily believe this. I just think if you're investing in anything long term, you have to look at the vulnerabilities of it long term. And I think one of the vulnerabilities is that if internet money basically and online finance takes off into a much greater scale than we are now, you could speculate that maybe gold corrects and comes down and doesn't have the same value that it used to. Now, for me, I think gold's one of the best long-term inflation hedges in the world. It's outperformed the S&P over the last 25 years. And so I generally like gold, and I think gold is a good investment long-term. For me, I'm not telling you to buy it. I have no idea. It might crash. I have no idea. But it's risky short-term is the point I'm making here. Whoa. I'm sorry, guys. I don't know. I accidentally clicked. I have this epic pen thing, and I don't know what I just clicked. Let there be light. I said, Steve Austin? I used to love Steve Austin in middle school. Or not middle school, elementary school. Like I said, there was a period of time. I don't know. I'm not gonna go into detail. They're derogatory terms, Daniel, for people from the South, basically. Like I'm from South Louisiana. Those are all pretty regular terms. That's okay. But regardless, there was a time when I was in 5th grade where I was really into professional wrestling. Really, really into it. My whole grade was into it. 5th grade, everybody was, all about it. My friend and I used to rent the pay-per-views. And I think deep down I knew they weren't real, but they were still fun to watch for, but I never watched them after like 6th grade, 5th grade. We had the whole thing in elementary school where it got big, and then by the time 5th and 6th grade rolled around, I just wasn't interested in it anymore. You trading NFP or you just watching what happens? I'll probably react to it and take some trades based off of it. I'm not going to try to get into a huge position ahead of it and try to ride some crazy game. That's just a gamble, and anybody that does that is usually just justifying gambling. Do you have your Ethernet in? Yeah, are we lagging, guys? So, Frostbite, you're the only person that said that we're lagging. So, are we lagging, guys, or is it just him? Big Lots delayed earnings release by a whole week. What's Big Lots? Big, right? Ooh, it's down big too. Big Lots, again, I've been saying the same thing about these dollar stores for years. People argue about it, but I think sometimes it's just hard to look at reality. Big Lots was $73 a share in 2020 and 2021. Now it's at 45 cents. That's pretty weak. No lag. There was for a brief moment. No lag, no. No lag here. Half a second once in the past half hour. Okay, then we're fine. Yeah, it's not showing me that we're lagging on my end. Yeah. Yeah, what I liked better than wrestling was the N64 wrestling games. I used to freaking love those games, dude. They were so much fun. They were so much fun, dude. You'd play with all your friends. You could get in the huge matches. I think it all led me to be into martial arts as I got older, even though like that was not real, of course. Now, as I've gotten older, I've been into jiu-jitsu and all that martial arts stuff since I was a kid. I used to love Karate Kid too, though. Like I was really into Karate Kid. Yeah, for sure. Expected numbers for, the unemployment rate's expected at 4.2%, so it's expected to drop 0.1%. And this is a big report as well, because the last time it spiked up to 4 point something. Prior to this, it was, last time it was 4.3%. I'm not sure. I can't remember what it was prior to that. I think it was like 3.9 or something. So we're definitely going to be watching the unemployment numbers too. Yeah, no, I appreciate it, Frost. I'm not mad at you for bringing it up. I just was curious to see if everybody else was experiencing it. Because sometimes it could just be like your internet, you know? Yeah, I remember. Yeah, my favorite video games as a kid were like Zelda, Ocarina of Time, and Majora's Mask. I like the Pokemon games a lot too. I was really into them. Yeah, like there was a bunch of games I used to play. So I had a Sega in the early 90s. And again, I've told this story before, but my parents used to make me, they wouldn't just buy me the new system. You know, like I remember I got a PlayStation one year, and that was the only time they bought me a system. The rest of the time I basically had to sell my systems. Like I remember I got a Sega, and then I sold it in the newspaper. Like I could put classified ads in the newspaper, and my parents would let me do it. And I remember getting really excited about putting classified ads in the newspaper. Honestly, looking back, it probably kind of stimulated my business sense, right? Like I remember I was really into like listing it on this is before the internet, when classified ads were in the newspaper. And so I remember being really pumped about listing my Sega, hoping I could sell it and then buy the newer system with money I made from cutting the grass. You know, so I'd sell my N64, I would sell my Sega. And I remember I ended up buying an N64, and the dude traded me like a bunch of stuff. So I traded him my Sega for an N64 with a bunch of games. I also at one point had a Sega Saturn. Yeah, Sega CD. And so yeah, and we used to swap it out. Anytime I'd want a new system, I'd have to sell my old one in the classified ads and buy it. Yeah. No, I never played RuneScape. I love my favorite games. I remember liking Tekken, sorry. Cobra Kai, yeah, so I've seen the first 5 seasons, and we've seen 1 episode of the new one. I haven't seen all the new episodes yet. My family watches Cobra Kai with me. Yeah. All right, guys. So Tesla at 228s. We got the SPY down there. It's at 545s. So if it comes in higher, are we gonna dump? No, I think it's actually the opposite now. I think if it comes in lower, we're gonna go down. Payrolls, numbers wise. So payroll numbers, I think they want economic strength for payrolls, and I think for unemployment, it's normal. They want lower unemployment. Tekken is, yeah, Tekken's a fighting game. So higher than 164K is good. I guess. I really don't know. And I always try to tell people, like, I genuinely don't know. I hope so, right? So I hope we come in better than expected. And I hope that means higher than expected. But again, I genuinely don't know. I'm going to put it in sub-only mode, guys. So if you haven't already subscribed, hit the notification bell. I appreciate it. But yeah, like I said, I hope it comes in better than expected and the market pushes up. The market's down. If I had to guess, I think we're going to go up on this report. But you never know. And next week we got CPI. I'll have to see what CPI is expected at next week. But next week we got CPI. I'm trying to see what we got the week after that. So next week CPI. The week after that. Might be one of those quiet weeks. Okay, so the next week we have retail sales. Wednesday, housing starts building permits. Okay, never mind. So we got stuff going on a lot. So yeah, it's actually really busy. Okay, yeah, so it's not slow at all. So this is the schedule. Okay, so today we have non-farm payrolls, unemployment. Again, payrolls expected at 164,000. Higher than that will signal economic strength. Lower than that will signal economic weakness. We also have unemployment dropping today. They are coming out. They're expecting. I'll put this up on screen. So NFP data is expected around 164K, along with unemployment. Unemployment is for the month of unemployment is for the month of for August. Expected at at 4.2%. Both drop right here at 8:30. And subscribe if you want to chat. We appreciate it. We'll put this up there so you can see it. Look at the gold chart coming back down a little bit. So we'll see what the SPY does here. Again, the SPY is pretty far away from lifetime highs now. Gold's getting a little close though, but I don't know what we're going to get today. I really don't. So we really don't know what the market wants to see. I don't know if you're talking to me. Higher than 164K would be good for the dollar, which could be bearish for markets, but completely depends. Yeah, but I think beginner's code, I think that you're looking at how the market was over the last few years whenever inflation was a big fear, right? And I think inflation data has calmed a little bit. I think that recently, and what I mean by recently is that in the last like 2 to 3 months, we've seen the reactions to economic strength or weakness switch back to normal, right? So for the past few years, when inflation was such a big priority, economic strength was seen as a negative, and the market would react negatively to a stronger economy because it signaled more inflation, right? More people that spend, worse prices get generally. A couple months ago, like 1 or 2 months ago, maybe 3 months, the market kind of pivoted back to like a good is good scenario, where back to more true to convention, where, you know, higher payrolls and economic strength is generally seen as positive and has positive market reactions, and vice versa. Economic weakness is seen as negative. You know, excluding unemployment though. Unemployment generally always is like lower is better. I don't think high unemployment is ever really good, even over the last few years, but it does vary. But I think right now we're back to normal. Yeah, that's correct. So if market fears a recession, and that's what I think we're currently at. I think the market fears a recession right now. And so we're kind of back to good is good scenario. Personally, that's what I think. At least that's how the markets reacted to economic data all this week, right? Economic data all this week. Yesterday, jobless claims were low. Like if we look at what we did yesterday, when did this data come out yesterday? It came out at 8:30. Yeah, so yesterday, jobless claims came out, and if you look at what happened after jobless claims, right around here, the market did push up. So jobless claims numbers showed up right here yesterday, and the market ended up pushing up. This is SPY, and so the market did hold on good, jobless claims numbers. If you look at the day before that, the JOLTS report showed. What did the JOLTS report show? The JOLTS report showed lower than expected numbers, a weaker economy. And if you look at what happened then, which was, I guess we did vary a little bit, but the JOLTS report caused this big red reaction right here. So here's 10 a.m. and then here's the big negative reaction that we got from the JOLTS report coming in low. But we did have ISM PMI data coming out later that helped us, so the market ended up going up anyway. And again, maybe like I tend to think higher payroll numbers is going to be seen as a positive, but I might be wrong. It might go completely the other way. We really don't know. What I would say is taking a huge position ahead of this report, trying to gamble on whatever the outcome is. It's just, again, a gamble. And again, in that situation, you're not really trying to trade profitably. You're just trying to feel butterflies in your stomach from a gambling addiction, in my opinion. And you want to just kind of take a step back and not do that. That's what I would, if I was you, that's what I would do. I wouldn't push super heavy into anything. I think that's very, very incredibly risky. So just be smart, be careful. Looking at our votes, it looks like a little bit more people think we're going to come in higher than expected. We got over 600 votes in a couple minutes, and 55% think higher, 45% think lower. Yeah, Michael. But again, they've been saying that for years, though, Michael. So I think the market probably already adjusted to a certain extent from that. It's not like, no offense, Michael. And again, I'm not talking smack or anything, but that type of sentiment has been around for years now. And again, I hear it a lot in my chat room where I hear people say, "Oh, well, AI is going to replace jobs. AI is going to replace jobs," and that might be true. But you also have to think about it in terms of like the internet, right? So what do I mean? I mean, the internet replaced jobs. Nobody thought that you could do retail on the internet like Amazon. But what happened is that it got really, really efficient. People started buying everything online, and that replaced a lot of brick and mortar retail jobs, right? But what did it also do? It also created a lot of jobs from the internet and hiring and all this different stuff that you need online as well. So it created just as many jobs, if not more, than it took away from retail, right? And I think we're going to see a similar thing with AI as well. We're going to see it create jobs as well as cause some jobs to be rendered obsolete is really what it's going to cause. It's just obsolescence in some sectors. Yeah, all love, man, for sure. Hey, what's up, T4? Man, I think a small amount gamble is fine. Well, I mean, do what you do, brother. You know, I'm sure that's what every guy said. Let me just bet $1 here and see what happens. Oh, lose that dollar. Oh, let me just bet $5. See what happens. Oh, lose that $5. Let me throw 10 out there. 20, 100, 1,000. You know, thus is the life of a gambler. You're right. And I hope people understand. Like, listen, I don't like losing money. Right? I could never be addicted to gambling. I really couldn't. Right? I simply hate losing so much. I'm very competitive. Like I'm like that in jiu-jitsu. I want to win. I'm like that in trading. I want to win. I do not like to lose. And I think it's good. I teach my son, like, I think being competitive is good to an extent. As long as it's not toxic competitiveness, it's fine. Wanting to win is good. And those are usually the people that do well, is people who want to win. But I hate losing. And I've been to the casino. I've brought lots of money, you know. And I can just never get behind. I don't care what it feels like. I hate losing money. And so going to the casino or even like playing something like this where I know the odds aren't necessarily good, it's a coin flip in nature. Like you have to, if you want to be profitable at trading, the truth is, right? You want to know the truth is you have to hate losing more than you like to win, right? Like that's a very famous quote or saying, but it's absolutely true. If you want to stay alive in trading, if you want your account to stay afloat, you have to hate losing more than you like to win. You know, and I think a lot of people just want to feel risk. They just want to experience like what it feels like to risk something big and get excited. Maybe their life's dull. Maybe they're addicted to gambling. Like if you look at like people who are actually addicted to gambling, usually it has something to do with like they love the risking money part. They just love risking something. And I think those are the people that get themselves in a lot of trouble, destroy their accounts, and then they're the ones that are blaming the platform. They're the ones that are blaming me. They're blaming whomever they can because it's such a hard thing to look at themselves and accept like, yo, I'm being a gambler here. So just be smart, guys. Understand. There's not really any edge taking a huge position ahead of payrolls. Like you might feel good, you might feel butterflies, but you're going to end up losing a lot, I think, sometimes. I heard you make this point another time. What kind of jobs do you think would be created? There's going to be so many jobs, right? Like first sector, there's going to be server sectors, like server jobs, like that type of thing. Like maintaining servers is obviously going to be big. Computing is going to have jobs, like computers are going to have to be built up. Processing power is going to increase. Like that's going to create jobs in like microchip, factories, like all this different stuff. You're going to have people who manage AI, like managers, people who manage it, use it. You're going to have people who build businesses around it, like, here's a good example, okay? Right? Like, here's a great example. I can use AI to build code right now. I can use AI to build code. I can use AI to code. So what's going to happen is you're going to have coding firms sprout up over time. You're gonna have programmers and programming businesses and coding businesses and algorithmic businesses sprout up, and they're gonna hire people, and they're gonna need people, and they're gonna need people, right? And that's gonna snowball and snowball and snowball, and more people are gonna get hired, and more people are gonna get hired, and so people are gonna get hired from AI. It's gonna create jobs without question. It's very obvious. Yeah, now it's probably gonna get rid of some jobs too. In the same way as like the carriage got rid of the automobile got rid of people who worked on carriages, and I'm sure they were upset, but it doesn't mean you shouldn't do it. It doesn't mean we should ignore the whole technology growth that we see. Yeah, it's spaghetti code right now, but within a couple of years it'll be much better. To be fair, any position taken at any time would be considered a gamble. When I say gamble, I'm not talking about risking money. Risking money is okay if you have a good odds and good discipline and all that stuff, right? Risking money's fine. What I'm talking about, the best example of this is like people who get addicted to slot machines, right? Like you got some people who are just so addicted to slot machines. Really, if you look at it objectively, it has to do with like there's so much stimulation going on. Like basically, slot machines are designed to slowly milk money from you. Right, and they'll give you a win every now and then to keep you hooked onto it, right? And the real way they get people addicted to it is they put up a bunch of shiny graphics and things. It's like a video game. It's like all these shiny graphics, like all this overstimulation, and so people get addicted to that, right? And even though deep down inside they know they're losing money, they know they're slowly getting milked for their money, they still get addicted to it, and they go back and they go back and they go back for that stimulation, and those are the people that get stuck on it. And so I'm not just talking about risking money. I'm talking about risking money with unfavorable odds consistently. And again, I think taking a huge position of your net worth on something that's relatively random, coin flippy, is kind of like putting 10K on a coin flip, right? Would you call somebody putting $10,000 on a coin flip a smart man? Especially if that was a large percentage of their net worth, a smart man or woman? Of course you wouldn't, right? Like you would be like, hey, they're freaking gamblers, right? And I think you got to look at this with the same context, because there's genuinely no edge taking a big position ahead of this report, because nobody freaking knows not only what the report's going to be, but what the market reaction is going to be to the report as a whole, right? So just be smart, guys. Like don't get stuck in that pattern of needing to risk big money to feel good and make a lot, hopefully, or whatever. Again, there's just as much odds that you're going to lose. Yeah, Keno. I always love Vegas Vacation, though. It might seem like I'm critical. I actually love poker. Poker's like my favorite game. But I know I'm not a gambler because right now, I'm not going to go into it. I try not to brag. People get weird if I say anything that sounds positive towards me. But I have enough money to where if I really wanted to, like, throw some big money on poker, I could. But I don't, right? Like, my poker account's got like $100 in it. And it's been there for years. I've literally had this $100 in my poker account for years. Haven't spent it. Haven't even had the time to play it. And I don't want to gamble it in unfavorable games. So I just let it sit there and the other way is like I went to the casino trying to play poker. I took out like $600, $700 in cash. And then I found out they didn't have live poker tables. And so instead of burning that $600 away, my wife and I just left. And so there's just a few things that I can see about myself, and I'm happy that I'm not a gambler in that way, right? I'm not saying I don't gamble. I'm not saying that I don't ever risk money, but I like to win, You know, I don't like to lose, and anything that I think is designed to make me lose, I avoid. No, I'm not staking anybody, bro. Too much variance. I don't like losing money. No offense to you, bro. And when they finally win big, they're back to break even, right? Exactly. You see it a lot with like sports bettors. Even though sports betting, like, look, the odds are horrible. You know, you got the market's sold to people who are just desperate to believe that they can actually do it successfully, right? Like, nobody really has an edge in sports betting. If you do, your platform will kick you off and send you a back off notification saying they don't want your action and you can only bet $5 or whatever. And if your platform doesn't send you that, you're probably not very good, you know. And again, it's funny because people think that they're gonna beat some of these odds makers. I talked about this like a couple days ago, but these odds makers are like mathematical geniuses. Right? These guys are like freaking MIT professors, or not, maybe not MIT. A lot of like these odds makers that these sports books use to create their odds are very good mathematicians, right? And it's funny because everybody thinks that, like, you got people selling all these courses and these call outs and these picks, and they're acting like they can consistently beat these odds makers. And these odds makers are freaking mathematicians. Like, you're never going to beat them consistently. You might beat them one bet, but you're never going to beat them consistently. And if you do, you're going to get booted off of there anyway. You know, they're not going to let you stick around and consistently beat their odds makers. And so, and again, that's something that a lot of people really don't understand. Or I think there's a lot of confirmation bias. I think people ignore the red flags behind it. So, because everybody wants to believe that they can get rich watching sports. You know, I want to believe that's true too, but it's not for most people. You know, with a few exceptions. I'm not saying there's nobody that can, but the amount of people selling some type of bet service, you know, yeah. Yeah, I'm not going to be specific about what... I don't even play really much anymore. I still play, but... Where did you make most of your money? I mean, I'm going to keep it vague. I do very well running this channel. This channel is a marketing business, you know, so I do well running this channel. But I have other income streams too, you know. So, but again, I don't need to talk about it. I don't really want to talk about it. Like I said, though, I do very well, you know. I'm comfortable. Yeah. Well, Carol and I kind of looked at each other, and honestly, we started to have a headache at the casino. We went to the casino. We started to have a freaking headache. Her and I were looking around, and we just kind of look at each other, and we're like, man, I got a freaking headache. This place is, you know. So you don't have poker, which is my only game I really like, right? I know how to card count, but I don't feel like going through the process of risk. Even in card counting, right? Blackjack, there's variance. You know, you're going to have good sessions, bad sessions. And in order to profitably card count, you have to basically go from casino to casino to casino. And it's not a pleasant experience. Like, they kick you out of the casino. And they get really mean about it, too. They're not very nice about it. You know, they say this whole, oh, blackjack's legal, card counting's legal. It's like, yeah, but it's frowned upon, and they certainly don't want you there. And they'll get weird. They'll get super weird with you about it. It's not like the old days in the 70s and 80s where, you know, they got really weird with you. But they still don't like you. And, that's too much hassle too for the money. But yeah, Carol and I looked at each other. We're like, look, let's get out of here. I got a freaking headache. I don't want to be here. You know, honestly, I couldn't even understand most of the slot machines. Like, I think we put like $5 in a slot machine and we didn't even know what to do. Like, we ended up just pressing the button enough until it just didn't give us anything back. And we were like, okay, well, it put a bunch of shiny lights in my face and then took my $20 or $5 or however much. It might have been 20. And so we were like, all right, let's go. Yeah, dude, honestly, I'm going to be in the WSOP next year. I am going to do that. It's a bucket list thing, though. Yeah, if it's like a 3-deck, it's probably fine, you know. Now they got like 6 decks, 5 decks. It's a lot. There's several ways to increase chances. That's mostly just gimmicks, though, brother. Like that, like, you gotta understand, the casino wants people like that. You know, there's this whole thing about dice and how you can learn how to throw dice correctly. Like, most of it's fugazi nonsense. Like they're just hoping that you believe it, so you'll go spend your money there. But it's too good to be true. It's just, Dana White's the only one that's staying profitable at blackjack. Yeah, because he's so famous that he can go to the casinos and be like, hey, I'll come bet at your casino if you give me this structure of blackjack, right? So he'll get to pick how many decks there are. He'll get to pick how long he can play. And Dana basically has an unlimited bankroll that's very similar to the casinos, right? So he can go there and keep playing until he wins. And once he wins, he leaves, right? He said this many times before. It's kind of like the martingale roulette strategy, but in blackjack. Where martingale, you just keep adding to a losing position, or you keep doubling your bet every time until you win. So you bet $5, you lose. You bet $10, you lose. You bet $20, you lose. You bet $40, you win. You walk away, and you win money, right? But again, if you lose 6 times in a row in the martingale, you lose everything, and so it doesn't work. The martingale doesn't work, at least in roulette, especially not nowadays with the restrictions that they have. So will the market drop on these results? We don't know. Maybe. It depends. Yeah, y'all check out Beach Bum's live stream tomorrow. Hit that subscribe button on Beach Bum Trading. Good swing trading content. Yeah, so we'll see. Bro, why the market moves this month, moves very slow. Well, it's September, so we have something called the September slump right now going on in markets. So in September, historically, the market is very red. On average, in September, the S&P and the Nasdaq go down 1.5% on average. And so, yeah, but right now we see Nvidia start to bounce. You can see the SPY up there. It's at 547s. So the SPY is still pretty close to lifetime highs. It's only about $20 away from lifetime highs. So it's close. Tesla rebounding up a little bit. SPY bouncing back. The NASDAQ bouncing back up some. What are your odds when day trading? I mean, they're not very good, For most traders, it depends. Like, most day traders lose. It takes a long time to figure out how to win. And that's why I always tell people, like, most day traders lose, right? The ones that end up winning are the ones that take it slow, trade small. You got to have a specific personality type to win in day trading. And that's definitely not everybody. And I think that's the biggest thing that people have to understand. You got to have a very specific personality type to win. You got to be very disciplined, selective, stubborn almost without to avoid losses. I heard a lot of traders used to be or still are poker people. Yeah, I'm a poker player. I know, like, Michael Patak at Top Step is a poker player too. Poker, there's a lot of similarities with poker, right? You got variance is very similar. You might do everything right in poker and still lose. You might do everything right in trading and still lose. Pot odds in poker are kind of like risk reward calculations in trading. So even though your accuracy rate and a specific strategy or setup might be under 50%, it sometimes is still the right move to take the trade if your risk reward is good enough, right? And that's kind of the same thing of, like, if you have to put 10 more into the pot, into a $100 pot, you got 10 to 1 pot odds, even if you got 5-8, it still might be the right move to call based off of those pot odds, even though, you're usually not going to win. But when you do win, it's going to compensate for the times you lose. Very similar to trading in that regard. Yeah. Gold. We talked about gold this morning. Again, gold's been breaking lifetime highs. And so for me personally, I'm not really interested in buying up gold now. If gold starts to pull back over a longer period of time, that's when I'm going to start buying it. And I'll probably use a DCA strategy into it. I guess poker requires much more skill than trading. Not necessarily. They're both very similar. Poker is about learning, like, it's hard to explain. You got to learn ranges. You got to learn table positioning and the ranges that people might have based off of their table positioning. You got to learn, you should only be playing about 20% of your hands. You got to learn discipline in that regard, where you should only be playing the top 20% of hands, with a couple exceptions. You got to learn when to bluff, when to call, and the most important thing is when to fold. A lot of people are really stubborn, don't ever want to fold, but the best players will fold a good hand, and that's something that takes time to build that discipline for. I'm shorting gold, 25-21s. Yeah, it depends on your size, I guess, but yeah, for sure. There's differences. It's not exactly the same, of course. All right, Tesla coming all the way back up, almost to 230s right now. So again, there's gold. Gold's just been breaking highs for too long for me to be interested in buying it. I think I'd rather buy it on periods when it's pulling back. Tesla coming all the way back up, almost green on the day, still red though, but basically filled the whole gap down from here. All right, guys, so we still got 20 plus minutes. We got over 1,000 people here already. Again, y'all hit that subscribe button, hit the notification bell. Again, we are going to be day trading on Top Step today. And Top Step's really useful because like what Top Step allows you to do on Top Step X is day trade without commissions, man. That's the best part of it, dude. Honestly, I made money yesterday on Top Step X, and I really got the hang of it, where like the most powerful thing is that, number one, Top Step, yeah, we're actually green on my account. So again, we're just kind of grinding it up, but we are green on this account. But the best part about this is that Top Step X, right? The platform Top Step X has 0 commissions, like tiny amount of fees. And so the big edge when you're doing this, like if you look at all my trades here, is like you can see these. I'm losing 74 cents in fees a trade. That's it. There are some fees, but there's no commissions. And so, this is a funded account program. They give you a demo. They test your skill with a demo. If you pass the test, they fund you between $50K up to $150K. If you lose, you only lose the monthly subscription. And so it's a great way to limit your risk. Most day traders lose. And so if you try to put the money up yourself, like $5,000 or more, you're probably going to lose all of that. Like, I know everybody thinks they're going to be different and they're going to be some prodigy, but it's very rare, and most day traders lose. And so when you're learning how to trade, it makes no sense to put up thousands of dollars of your own money, in my opinion. Like, you're gonna have people be like, no, don't do it, talking about these prop firms, but it genuinely is a good way to limit your risk. You're still risking something. The base one's $49 a month, but if you pass it, you get $50K in funding. You got to make $3K without losing $2K while following their rules and conditions. Some of the best rules in the game in funding as well. Like, once you're funded, some of the best rules in the game, and they've paid out over $40 million. And remember, they are a sponsor or an affiliate, so they pay me money, and I'm biased because of it for sure. So understand that. But I think the most powerful thing that I've found out, like I got funded a few days ago. You can see it's a $50K express funded account. The best part about this is that there's no commissions. And so with futures, like if you trade the regular NASDAQ, you're risking big swings in your account, like big swings, up and down, massive swings. On here, I can trade micros, and since there's no commissions, I can get in micro trades, and it's 74 cents in fees a trade. So I can make $18, little small gains that slowly add up in time. Like yesterday, we made like $100, but we got into a bunch of little bitty trades, which means I can limit my risk. So once I'm funded, I can take small base hits, which is kind of how I trade the best. And those base hits can slowly add up over time. And it's going to be easier to grow profits this way. And again, if you want to try it out, I'll put the link up. They are an affiliate of mine. But it really is a good way. Most day traders lose. I've seen it happen. And everybody thinks they're going to be different. This is just a way to limit your risk. I think everybody's probably most day traders are still going to lose here because most day traders lose, but it's a lot cheaper to lose $49 a month than it is to put up $5,000 and just trying to look cool in the market. It just doesn't make sense to me. So again, check them out. Here's the link. What do you think the data will say today? I really have no idea. I hope we have positive action. I genuinely hope we have positive action, but I don't know. So what does a gap fill mean? So a gap fill means you have these gap downs overnight is when a stock moves down like a big percentage overnight. And a gap fill is like on Tesla, you can see it happen. Some type of news came out that dropped Tesla all the way down to 225s. A lot of the time, this is what happens, though. And this is this is one of the most important themes of trading, in my opinion, especially swing trading, extension trading, I'm going to call it. One of the most important themes for this is understanding how to ride that extension. You know, a lot of rookie traders will see this big gap down here in Tesla, and they'll say, oh, well, look how weak this is. This is weakness. You know, so what do? They short, and they try to ride like a low of the day breakdown or something like that. That's very low edge. There's not much edge doing that. It's much more probable in anything to look at the extension. And so it's much more probable, if you want to make money and stuff like this, to say, hey, Tesla gapped down this huge percentage already. What's the most likely move forward? The most likely move forward is for at least a small bounce back up. You know, because why? It's extended. It's down so much from this big move that it's much more probable that we're going to go back up a little bit at least. And what a gap fill actually is when the entire drop fills. So here's the gap down. A gap fill is when it comes all the way back up and fills that gap, right? So it's neutral after everything's said and done. It went down really big, and then it filled the gap on the upside and went back up really big, and now it's flat relative to where it was. You know, that's a gap fill, and it can go on both sides, up and down. Data is irrelevant. What the market does in response to it is what we need. Well, of course. I mean, that's very obvious. Yeah. That's kind of like saying the money in my bank account doesn't matter. You know, the number that my bank shows is what matters the most. You know. I'm not expecting anything, David. Davey. I hope it goes up. But I don't know. Yeah, you can lose a lot of money in poker. I wouldn't really advise that either, Locke. Head and shoulders is a pattern that looks like this. Right. So you got the head up here and you got two shoulders, right? So generally speaking, it's kind of like a peak trade where stock will go up, hit some level, come back down, put in a lower high is what it means usually. Once you see this lower high right here, so like once you see a lower high, like it's not here, here's a lower high, that's when the head and shoulders pattern might play out and you might continue down. That's a head and shoulders pattern. I'm not saying it works. I'm not saying you should take patterns like that, but that's kind of how they go. Nothing's 100% or definitive, Tonka. It could go up, and we're just using it to look at an edge. So Saints. Will the Saints win the Super Bowl this year, chat? Saints game Sunday. I'm excited. I'm ready. Yeah, I've had a bucket list. For somebody that's like, hey, I don't like gambling, my bucket list thing is to be in the World Series of Poker main event, which costs $10,000. It's a $10,000 poker tournament. You know, coming from the guy that says, oh, I'm not a gambler, guys. I don't like gambling. You know, my bucket list is to be in the 10K World Series of Poker. Again, though, it's always been like a bucket list thing. And really, it's like I'd go on a trip with my family, and I've always wanted to do it, you know. Do you believe technical analysis actually works? Some of it, yes. I mean, it depends on what form of it, Brandon. I think extension obviously works, right? I think looking at the extension of something on the downside or upside and using that to gauge short-term movement is a very powerful thing for sure, right? Now, you got all these moving average crossovers and all this different stuff, and some of it is nonsense, right? Again, and I think the markets that people face, like I think you got some traders that are so technical driven that they think everything is based off of technicals, right? So I always say the same thing, but it's like somebody saying CPI. It's like CPI comes out showing much higher than expected inflation and the market drops 2-3%, right? And instead of looking at that objectively and being like, hey, this is just the CPI report coming out negatively impacting the market, you got some technical wizards that are going to be like, hey, this is the 217 moving average crossover happened at the same time that the RSI was at this level, and that's the reason the market went down. And they're just completely oblivious to fundamental and economic reports. So I think when it comes to technicals, I think technicals can work. I think fundamentals are going to be more impactful. So I think you could have the best technical pattern in the world, but if payroll numbers show really big economic weakness, the market's still probably going to drop, regardless of how bullish the technical pattern is, with the only exception of extension. Extension plays into everything. So if something's really extended, even if a stock has good earnings, if it's really extended on the upside and up too much, it might still fall down, even though it has good earnings and good guidance or whatever. So the one that you want to take into context with everything is extension, in my opinion. But aside from that, fundamentals are going to lead long-term trends in markets. Yeah, it works, but the market could be irrational. Yeah, basically. Yeah, for sure. He might be getting old though, Faye. Alvin, do you play fantasy? Not football. I play fantasy sports. All right. Yeah, that's all right. Oh. Oh, you gonna say hey? Oh, no. There you go. Hey, bro. How you doing, man? Jack's dancing for the camera. All right, guys. I'll be right back. All right, I don't know why it muted it real quick. So I'm here. Yeah, so sorry. Had to say bye to the fam. All right, guys. So what do you guys think? Give me your last minute prediction. Hyper specialization, yeah. Fundamentals and technicals, yeah, for sure. Right, exactly, Scrub. He says the thing about TA is that some people use it, get lost in the sauce. They try to predict the future rather than trying to see what the market's doing currently 100%. They get so lost in it. Again, I always bring up this movie. There's a very famous movie, I think it's called Pi, where a guy gets so lost in trying to create like a stock market algorithm and predict the stock market, he goes crazy. I think some people just get lost in technicals, and I think there's a lot of egos that float around markets. You know, there's a lot of egos that float around, and so I think like it creates this scenario where, you know, people act like experts. You know, they act like gurus, they act like prodigies, they act like experts, and a lot of them target and specialize in technicals, right? And so it creates this thing where they're so desperate to be right, and they're so desperate to be a leader in their field that they refuse to look at areas where they might be wrong. They refuse to look at areas in which they can be more knowledgeable in things, right? And they refuse to admit that they could be wrong about anything, you know? And so it creates this situation where, again, I've had people come to my streams and be like, hey, you know, CPI report will come out. And again, CPI report will be like super high. Like I remember one time it showed up at like 3 point something. They expected 2.9. It showed up at 3 point something. And the market, of course, dropped like 1% very, very quickly on higher inflation data. Market panicked a little bit, right? And I had somebody come to my stream and be like, hey, you see that big drop? That big drop was because of the pivot points in the market. And, you know, the RSI was showing this, and the crossover of these moving averages showed this. And I just kind of laughed and was like, dude, that drop was because CPI came in super high. You know, the market panicked. Like, and they started arguing with me about it. Like, nah, that wasn't from CPI. And it's like, okay, so you're telling me the market randomly dropped over 1% exactly at 8:30 when the CPI report came out, but it wasn't from the CPI report. It was some magic and technicals. It's like, come on now. Like, and I think you have to be willing to say, hey, like, instead of that, the person should have been like, hey, you're right. I didn't realize CPI came out at 8:30. That makes more sense. You know, understand you might be wrong, and that's okay. But you got people who create these communities and they think that they can just never be wrong. And I think that's a problem. And that's why I always try to be honest and tell people I don't know. Maybe I'm wrong. I could certainly be wrong about all this stuff. And I try to be willing to learn. Now, I think running a community, you also get, you know, sometimes when people start to act toxic, you just kind of ban them. And sometimes I probably ban people a little bit too quickly. But I think you kind of got to run a channel like that too. Yeah. Yeah, for sure. Where can I watch this data live? It might be right here. All right, here we go, guys. We got almost 2,000 people watching already. Let's do this. Yeah, I'm definitely one of the top 3 most biased ever. And yeah, for me, it's kind of like, look, like I'm okay with people wanting to be technical heavy, and I'm okay with it. I think technicals can be powerful, but you have to understand the true nature of the market, which is that it's both. It's both fundamentals and technicals. You know, and again, the way I always try to tell people is something like this in Tesla, right? Something like this is almost never a technical move. And this is the thing that a lot of technical wizards need to try to understand, is that a move like this is almost never technical, right? It's not like moving averages crossed over and you got this huge dump in some big blue chip stock that is this massive. That just doesn't happen. That's not a technical driven move, right? It's almost always some type of catalyst, fundamental move, like bad news in a sector, bad news in a stock, you know, bad news in the economy, something, right? It's almost never technical. Technical moves happen slower. They happen more methodically. They do not have these big bursts and reactions up and down, with a couple exceptions. As long outside of maybe penny stocks. Penny stocks are different, but even those are influenced by big traders taking big positions. So I wouldn't even call those technical moves either. But that's the hardest thing for a lot of people to understand, right? Like big gapping moves, big upward moves, downward moves, they're almost never technical in nature. They're almost always catalyst driven. Yeah. I would say the market's fearing economic weakness. Again, personally, we got 5 minutes chat. We got over 2,000 here. Personally, I think market's fearing fundamentals. I think the market is fearing recessions and economic weakness. And so I think higher payroll numbers is good. Lower unemployment is good. I think lower payroll numbers is bad and higher unemployment is bad. But it varies. We got 2 big reports coming out. The SPY is actually pushing up a little bit ahead of this report. I'm going to keep NVIDIA gold. I'm going to put the QQQ. Yeah, we'll put the QQQ, the SPY up, and a couple other ones. I'm not really a big fan of moving average. I like moving averages, But I like longer term ones like the 200 EMA. I think the 200 exponential is one of my favorite ones because it's just such a long-term average. You got a lot of traders that rely on it. The shorter ones, there's too many different variations to make any reasonable predictions from it, I think. But like long-term moving averages, this is a good example, right? Like on the SPY, you can see the VWAP here and the 200 EMA. Here's the 200 EMA, here's the VWAP. And so you can kind of see both of those do a pretty good job of like predicting the trend, right? And then once we finally break under both of those levels, that's such a big milestone area right here that when we finally break underneath it, we trend down a lot, and that price action is more predictable because we're under those levels. So I use them as milestone levels and also trend indicators. Well, it depends, Keith. It's a little bit of both, to be honest. It's not just play the player, especially when it comes to online poker, right? Online poker, you know, a lot of the times you're not going to be able to gauge what the player's doing, right? So it's you play the player in regards to range, like what their range might be based off of how loose or aggressive they are. But you also play your table position. You also play your hand, of course, or at least the perception of your hand, right? Like it's nuanced. All right, guys, we got 2.5 minutes left. 2.5 minutes left. Again, hit the subscribe button, hit the notification bell. I appreciate it. Let's do this. Payroll data drops soon here, chat. Again, be ready. Payroll's expected at 164,000. Chat, 164K. I'll put this up on screen. Be ready here. We got 2 minutes. Unemployment expected at 4.2%. Last time it showed up at 4.3%. We also have Williams, FOMC member, speaking today, too. All right, guys, here we go. A minute and a half left, chat. A minute and a half. Yesterday was prelim NFP. Today's the actual NFP data. All right, guys, we got 1 minute. We got about 3,000 people watching. I appreciate the love. Thanks so much for choosing to watch non-farm payroll data with me here. Hit that subscribe button as well, chat. We're pumping towards 150K. We're very close. We're basically at 146,000. And so, hey, hit that subscribe button, hit the notification bell. We got 1 minute. I don't charge for anything. I don't sell a course, don't sell a service, don't even claim to be a good trader. Put everything out there for free, and I'm very quick covering these economic reports, and we cover all of them as well as all the big earnings plays, all the big FOMC meetings, Jerome Powell, rate cuts, all that stuff we cover. So subscribe, hit the notification bell. We also day trade, swing trade, and invest live. 40 seconds, guys, 40 seconds. This is a little bit late, so I'm gonna take this off the screen. We got about 35 seconds right now, 35. I appreciate it, Premium. Thanks, brother. $15 seconds, guys. 15 seconds. All right, here's the SPY. Here's gold. And here's the Q on the right, on the left side. All right, here we go. 5 seconds. All right, so the report drops right now. All right, there's the payroll numbers. 142, lower than expected payroll data at 142 versus 164 expected. Unemployment showed up as expected at 4.2%. And honestly, the market likes this. Look at gold go down. The market's actually moving up. Sometimes the first move is the wrong move. But again, this showed the opposite reaction to what I thought. We came in at 142,000 for payrolls versus 164,000 expected. 142 versus 164 expected. Last time we showed up at 89K. This time we showed up at 142. Last time we showed up at, or we expected 164. And again, markets are pumping up on this report. Wow, this is the opposite reaction to what I thought, to be honest. As I said, you never freaking know, and sometimes the market's unpredictable. But hey, unemployment did show up at 4.2%. I'm assuming maybe that is what helped this report. As expected, unemployment data at 4.2%, and payrolls showed lower than expected numbers here. Again, unemployment rate 4.2%. Payroll numbers showed 164,000. And again, we'll see if this is the wrong move. Sometimes the first move is wrong, and there's a complete retracement. Again, generally speaking, I think this shows weakness. I'll put the numbers up on screen, but again, generally speaking, I think this shows weakness. Yeah, I'll put this number up on screen. Again, we'll see if we hold. We're very flat. We're right in the middle from this report. Gold is pumping up because, again, I think lower payroll number shows weakness. Like I said, sometimes the first move is the wrong move. Look at gold pump up, guys. So gold's getting close to lifetime highs. Gold's only about $10 away from lifetime highs. So again, market is surging up here. Look at this. Gold is the one that's surprising me. Look at gold. Again, I think it's possible we correct on the SPY and the Q. You know, so far we're up a little bit, but honestly, we were up much more and we already retraced back down. And again, sometimes the first move can be the wrong move. And I think I got this right. I think I said I thought payroll numbers would come in low because of everything else, but I don't know what I said. I can't remember what I said. Chat, let me know what you guys think I said. I can't remember. That means that the economy was weaker than expected in regards to payroll, Ryan. And again, now we're starting to correct back down. I don't think bears are in disbelief. We haven't really negative reacted too much either. We haven't really positive reacted too much either. We're basically flat. It's not like we're ripping up, breaking highs. The only thing that looks really strong is gold right now, which generally means economic weakness. So, you know. All right, guys. So, yeah. Massive move here. And again, if you want to help support your boy here, check out Top Step. Top Step is really, really nice because if you want to day trade, I'm about to start day trading on my $50,000 funded account. I have a $50K funded account. This account only cost me $50. I had to reset a couple times, so a little bit more than that. But they give you a demo with $50 a month. If you can hit $3,000 in profit on that 50K demo without losing 2K first and following their rules, they fund you 50K with a 90% split. Some of the best rules in the game in funding. You can also use Top Step X, which has 0 commissions. And it's a powerful thing because if you trade the regular NQ or the E-mini, they move so quickly, you can lose hundreds, if not thousands of dollars within a minute or two. Micros allows you to trade with much smaller size. And again, there's no commission. It's only 74 cents in fees per trade. So I can take these small $20, $30, $10 scalps and actually build up profit like I did yesterday. I'm green in this account doing it. And this is one of the biggest edges in funding, in my opinion. 0 commission on Top Step X. They use trading view charts, so a lot of great indicators and all that stuff. And in the futures market, you can day trade essentially the SPY, essentially the Q, and the E-mini and the NASDAQ. It's the same price action, and the patterns are very, very similar to blue chip stock patterns. But again, in my opinion, this is the best edge in the game in funding right now is 0 commissions on Top Step X. It really is. They're an affiliate of mine. I'm biased, but they pay out tens of millions of dollars, and it's just really useful to avoid losing more money than this in the beginning. Most day traders lose. I think that's probably the same anywhere you go. It's a lot cheaper to lose here than it is to put up thousands yourself and lose that. And so again, if you want to check it out, here's the link. I appreciate the love. Thanks so much. We still got 3,000 people. The market is starting to turn back up though. So the market's starting to rebound back up. Look at this. The only thing I can think of is extension, right? Extension is a big factor regardless of anything. Fundamental economic reports. We are extended on the downside. The market has been pushing down a lot the last couple weeks, and that's my guess here is that, again, the market's extended on the downside, and so we're bouncing up. You could also take into context the unemployment rate wasn't higher, and a lot of people thought unemployment would be spiking up as well. So, and payrolls were still noticeably higher. You have to look at both the expected number. So the expected number for payrolls was 164. Okay, but you can't just look at the expected number. You have to look at the previous number as well. So the previous number was 89K. 89K. So we came in today. I'll put current up here. We came in today at, again, 142K. So what this means is that we were lower than the expected number, lower than 164K, but we were greater than the previous number at 82K. So we were greater than the previous one at 89K. So lower than expected, but better than last time, basically, is what these numbers are. And maybe that's why the numbers are pushing up. I don't know. SPY's still slightly red on the day, though. So it's not like anything's up super big or down super big. But yeah. Yeah, that's probably what I'm thinking too, Tony, is that last time unemployment was at 4.3. It getting bumped down to 4.2% is optimistic as well. So the unemployment number was better than last time too. Yeah, word on the street was 120. Actual was 142. Maybe that's why. Why is it pushing? Because it's impossible to predict exactly what the markets are going to do. Guys, this is why I tell people do not take a huge position ahead of this report, even if you get the actual numbers correct. The likelihood that you're going to get the actual numbers correct, as well as the actual direction the market moves from the numbers correct, is such a low probability thing. It's just a straight up coin flip gamble. It's not worth it. You know, you're not going to be able to predict the direction and outcome accurately, consistently. I don't care who you are, what course you take. I don't care what your mentor tells you. They're usually just trying to sell you something. Most day traders lose, and the reason they lose is because they take huge gambles on stuff like this, and it just doesn't make sense. You know, it just doesn't make sense. But still, I'm glad the market's moving up. I would rather us push up, even though we're kind of doing the opposite of what I thought. I thought higher payroll numbers would make the market go up, but we had lower than expected the market's moving up. So again, it kind of shows the unpredictability. I was definitely wrong with that, and that's okay. We don't even know if this move is correct not until normal trading hours. Yeah. Unless you're me. Yeah, I mean, maybe. But again, I think a lot of people in the chat claim that they're correct regardless of whether they actually are or not. So, you know, I see people a lot of the time. Like, there's a lot of ego and you know, people want validation sometimes. And so I think what I see from a lot of people is that they're like, yeah, you know, I got it right. That's what I got. I made 20K. So again, the example I always use, I used to have a guy that worked with me. He didn't work with me. He was like a member of the community. I'll guess is what I'll call him. He never really worked with me. But he entered and said, hey, guys, I just got started trading, you know. Thank you so much. You've helped me so much as a brand new trader. You know, I had never traded before, and now I'm starting to finally get it. Thank you so much. Your content's great. And I was like, oh, no problem. You're welcome. You know, I started letting him kind of mod a little bit for my Discord. Within a couple weeks, this dude was telling everybody that he had been day trading for 15 years and he was making 20K a week doing it. And of course, it's nonsense. Like, of course he wasn't. And again, I don't know if he thought that that's what I wanted, but I wanted him to just be honest. And so, you know, yeah. And eventually I had to part ways with him. And yeah. Tesla flying? Is it really? Gold's flying up too. I want to see if gold breaks lifetime highs. It did end up dipping a little bit from the previous move. Yeah, Tesla up to 234s. Well, the NASDAQ, the SPY, NVIDIA are all up pretty big. NVIDIA's actually technically green on the day now, and I think NVIDIA needed this. Yeah, I'm pretty sure Top Step allows you to trade data, although I'm not 100% Daniel. I'd check with them. Does this report favor rate cuts more? No. Yes. And that might be why the market's reacting positively to it, is because this report shows more economic weakness than expected, which signals more of a need to cut rates, even though unemployment numbers stayed the same. All right, guys. So alright, so man, I gotta figure out Chat GPT to my rescue. Where you at, bro? I gotta figure out. Again, people want to know why AI is useful. I'll show you why it's freaking useful. I have a meeting at 12 or at 11:30 a.m. Mountain Time, but live in Central Time. What time is that for me? 12:30 p.m. Central Time. Okay, gotcha. Okay, that works. When you didn't need AI for that. I kind of did, you know, but I'm lazy. All right, guys. So big pullback here. I'm gonna buy this dip a little bit on Top Step X. Where's my? No, I just want to be able to. Where's my trade log? Oh man, I want to buy this. I'm not telling you to buy it. I'm late now. Look at it push up. No, I don't know what I did with my. Here, the only way I know how to go back in from this is I gotta go back here. I know if I reset it, I don't know how to. I gotta learn how to use Top Step X. Forgive me, guys. Forgive me. Orders. There it is. Okay, I figured it out. All right, got it. All right. I want to buy this dip. Okay, we're filled. Wait, where's the trade? All right, so we just made 25 bucks, but like I don't see it anywhere. Is this the? I'm gonna reset Top Step X. I don't know what I've done. We made 25 bucks there though, so that's good. I made a little bit. How do I ingrain this back into my charts though? I'd like it put back in here. Hush, Bruce. Chill out, dude. That's my boy Bruce. I would be trading this action more. All right, I'll try. See, I'm in this, but I don't know where my gains are. I gotta look at my gains right here, which is fine, I guess. Oh my gosh, so I was just trading regular net. I was trading the E-mini. Oh my goodness, here. That's my problem. I've been trading the E-mini. I just made some money, which is good. I made $75, which is nice, but I got to switch. That's what I've been doing wrong. I've been trading the regular E-mini, and I was correct about the bounce. I thought we would bounce right up, and there we go. We did. So, you know, this is very predictable, to be honest. You know, again, I talk about complex stuff sometimes, but sometimes the easiest strategy, look for good volume rip, buy a little dip, and then ride the bounce back up. John's trading course coming soon, you know. My name is John. My cat's name is Bruce. My wife's name is Carol. My daughter's name is Maddie. All right, so there's a big rip back up. Look at Nvidia, which is leading the market right now. So Nvidia is really leaving the market. Hey, Tiny, good morning. Good morning, TGIF. Yeah, it's Friday. I'm excited for Friday. Is your wife Carol Baskin? No, but that show, I've probably said that to her a couple times. My wife spelled Carol. Carol Baskin spelled Carole, and she definitely took her husband out. You know, freaking Joe Exotic, a freaking American. You know. Although I do think he made some dumb decisions, and he got really stuck on revenge when he should have just let it go and recognized he was living the good life, you know. I mean, his good life. I'm not saying I would, you know, never mind. But, a freaking American. I support him, you know. Yeah, I always joke around. My last name's London. I've got that English ancestry. I did a DNA test, you know. But yeah, I got that English ancestry. But Carol and I sound like the most English-British couple in the world. Or Carol and John London. The most English couple ever. Yeah, NFP data's out. It might be right below you here. Unemployment 4.2%. Non-farm payrolls 142. Market reacted positively. Nvidia's pushing up. I'm going to put gold up here as well. Here's gold. Gold's pumping up. It's at 25.50s right now. 25.50s. Work on what accent? I don't know. I'm from South Louisiana, you know. And so I don't know what kind of accent I have. A lot of people say I don't have an accent here. But again, I'm from like 45 minutes away from New Orleans. And so if I do have an accent, it's probably kind of like a southern city accent. And some people might be able to hear it. But I think also running this live stream for a long time has probably kind of took the accent out a little bit of me. It used to be much heavier. I was watching some videos from 10 years ago. I sounded much more country 10 years ago than I do now. And so it could just be a change in my accent over time from live streaming. I'm from West London. Nice. Yeah. I've always wanted to go to England so I could say, hey, so I could buy something that required my ID and have them be like, your last name is London. I'm sure, my luck, they'd probably not even notice. All right, guys, look at the market. SPY technically green on the day. Nvidia technically green on the day. Gold's pushing up towards lifetime highs. Yeah, I don't hear anything. Yeah, I mean, like I said, I've been running a community where I talk for hours and hours every day to people, so accent's going to slowly chip away, I think. It depends on where I'm around. If I'm around somebody from Louisiana like me, the accent will kick on a little bit more. All right, so Fed Williams is speaking right now, too. So Fed Williams says that he is ready to start the process of rate cuts. He says he is ready to start the process of cuts, and monetary policy can be moved to a more neutral stance depending on the data. And he's a voter of the Fed, right? So here's Fed Williams' quote that he just came out with. He says he's ready to start the process of rate cuts, and monetary policy can be moved to a more neutral stance depending on data. I'm sure the dollar index is down a little bit on this report, but the market's probably positively reacting is what I'm assuming here. Yeah, so the Dixie is down because it's payroll numbers, right? So you got to assume the reaction is going to be higher payrolls is better for the dollar because it's more dollars, right? Higher payrolls is more dollars. And so that's what we see is the Dixie going down, market's moving up a little bit. I sound like the guy from Waterboy. No, I was never. That's like a Creole accent. So mine, it's hard to explain. Like in Louisiana, there's so many different accents, right? If you go up north Louisiana, it's kind of like an Alabama-y accent with like really nasally. If you go to places like Thibodaux, Louisiana, you're gonna run into a Creole accent, which is kind of like it's much different. I know some. You go to like Lafayette, it's a very similar accent. But there's a lot of different accents. Again, I'm from Baton Rouge, Louisiana, so my accent is more of Southern, but city Southern. Like a New Orleans accent is a little bit more city than I don't have a New Orleans accent either, but it's close to one. It It's hard to explain. There's a lot of different accents in Louisiana. Boudin? Yeah, Boudin's good. Yeah, a lot of y'all aren't going to hear an accent either. From Portland. Hey, what's up, Filipino? Thanks. Appreciate the love. Did you trade the spike? Yeah, I made some money on the spike. I probably made like $100 on everything. I'm still waiting. I'm slowly trying to chip away. And we are green in this account, which is nice. So we are green. Slowly grinding it up. Hey, with futures, why did it move reverse? I mean, it didn't really move reverse. Again, there's no definitive reaction to economic reports, and this is what people have to understand. There's no... you don't have an accent, but you do have certain verbiage that's different. Yeah, I mean... I'm from the South, you know. Our lingo is a little bit different than... you know, like if you listen to like a good example is like Theo Von, right? Theo Von is from where my grandmother was from, a place called Covington, Mandeville, Louisiana, right? Like that's where I grew up, is Covington, Mandeville. So if you kind of hear, if my accent does kick on when I'm around Southern people, I'm not gonna say it sounds exactly like Theo Von's, but it's similar. You know, it's similar to like Theo Von's because he's around where I'm from. He was born around where I'm from. All right, and again, gold coming back down. I don't know if gold's gonna break highs. Gold lifetime highs is up here, this big green line at 2570. It's kind of sideways though, almost looks like a bull flag. You can also see the dollar index start to pump up here from this report as well. Again, the SPY's moving up, technically green on the day, and so we'll see if that continues back up with it. Yeah, well, they did this video where they increased the speed on British accents. Or maybe they decreased the speed and it turned into a Southern accent. So, is futures sustainably profitable? It depends on the trader. If the trader's good, sure. But if the trader's not. Yeah, so Raven, I think you're behind on the stream. Hit the live button. Raven, it came out, 25 minutes ago, brother. Yeah, I mean, buddy, if you want the music, I'll send you the playlist. This is an old playlist that I've built for years running this live stream. So yeah, it's mostly lo-fi music. There's a little bit of everything in it, but it's kind of songs that I've liked that I've just kind of added to it. It came out lower than expected, weaker than expected for payroll data, but unemployment came in lower than last time, and so the market reacted positively to it. And gold also reacted positively to it because there were less payrolls than expected. There were 24,000 less payroll jobs than expected. That signals weak economy trend, and that's not good precursor for why rate cuts are necessary. I mean, I think that is a precursor of why rate cuts are necessary. You know, rate cuts are going to be argued for needing to happen from economic weakness, not strength. If the economy was strong, it means we have less of a need for rate cuts and more of a need to have a restrictive monetary policy to combat an interest rate or to combat inflation spikes, right? So if the economy's running business as usual, everything's fine, thriving, and good, we don't need rate cuts. The opposite is what we need. It's a restrictive monetary policy to push inflation down. Right, what this report showed was less payrolls than expected, which is more of an argument for rate cuts, not less. And again, I'm against rate cuts. I don't think we should cut rates. I don't think it's good to cut rates here. I think I'm worried about inflation spiking up like it can, and it's already up a ton over 5 years, and people are really going to be unhappy if it keeps going. So, but again, this report coincides okay with rate cuts. All right, guys. Yield curve is not inverted. Is it really already? Let me see. Is there a symbol that I can check rate cuts or the yield curve inversion? I always try to check it, and I guess you could just look at 2-year. I guess let me look at 2-year bonds. 2-year bond yields are currently at 3.698%. 3.7% for 10-year bonds. So yeah, they look uninverted. So again, here is a 10-year treasury yields at 3.7%. Here is 2-year treasury yields at 3.69%. So technically 10-year yields are higher than 2-year yields, which would signal an uninversion in yields. If you don't, you hear this word thrown around a lot, and the word is yield curve inversion. So for everybody at home that might not understand what all that means, right? So bonds are basically you loaning the U.S. government money, and the U.S. government will pay you a set amount for treasury bonds, specifically is what this is. It's also the same thing. So notes, bonds, bills. Bills are very short-term bonds, right? So they're like 0 to 6 or 0 months to a year. Bonds are called bills. Notes, I mean, it's either I get these two mixed up. Notes, I believe, is notes, I believe, are 1 to 10 year bonds, and then bonds are over that, anything over that, right? But this is basically loaning the U.S. government money, and they'll pay you a specific guaranteed interest rate, right? So this is guaranteed. So again, if you're sitting on cash long term and you don't like the risk of the S&P, bonds might be a good option, right? Right now, I know for like for an example, this is like whatever. T-bill is a treasury bill ETF. It tracks 3-month bonds, right? 3-month treasury bills. And if you look at these right now, right, these are paying out a whopping 5%, right? A whopping 5% right now. So what this means is that it's 5% annualized. And so let's just say that these the easiest way to put it is we could look at what the 10-year bonds paying out. So the 10-year treasury bond goes like this, right? It's paying out 3.7%. That means that every year the U.S. government, if I loan the U.S. government $100,000, that means that every year they're going to pay me 3.7%. And so every year I'm going to get $3,700 in interest payments. And then at the end of that 10-year period, they're going to give me my $100K back. Right, so over a 10-year period of time, unless you're using compounding, you're going to make about $37,000 out of $100K. You're going to make about 37% is what you're going to make loaning the U.S. government money over a 10-year period, right? And this is what I'm saying. It's guaranteed by the U.S. government. So if you're sitting on cash long term and you don't like the risk of S&P or the NASDAQ or the Dow or whatever, you can buy bonds, still earn 3 to 5% yearly on average with bonds. You could also follow short-term bonds around and get a couple more percentages higher. Like you could buy short-term bonds, 3-month bonds are paying 5%. But these are bonds, right? The yield curve inversion essentially means that shorter-term bonds, like the 2-year treasury bonds, right, which is called a note, 2-year treasury note, is currently 3.69%, right? And the inversion means that short-term bonds pay more than long-term bonds, and that's inverted to convention, right? It's inverted to logic. In logical terms, shorter-term bonds are less risky, and so they should yield less returns, a smaller percentage, and longer-term bonds are more risky because of inflation and all that stuff, so they should in turn yield more, is why, they're like that. But when the yield curve inverts, meaning short-term bonds for whatever reason are starting to pay more than long-term bonds like the 10-year treasury, that's called a yield curve inversion. Now, when the yield curve uninverts, it generally is a sign of a recession looming, right? A coming recession. So if the yield curve uninverts, meaning short-term bonds have been paying more than long-term bonds, but that uninverts, so now short-term bonds, i.e. the 2-year, are paying less than long-term bonds, which are paying 3.7% right now, which would signal, again, this does signal the yield curve uninverting. that historically can be a recession sign. It's not 100% accurate, but it's pretty accurate, to be honest, and that can signal a coming recession. Now, it doesn't mean we're going to. It doesn't mean we're going to hit a recession anytime soon. A lot of people don't think we are, and they think that it's a false sign, but anything could happen, and it's certainly possible. And so let me know what you guys think. Actually, I'm going to do a poll right now with all this said and out the way. I'm going to do a poll. Do you guys think we're going to hit a recession anytime soon? Yeah, I'm catching back up with the chat. Yeah, it's time for rates to come down. Yeah, catch it back up. Yeah, I'm gonna do a poll. So we in this poll. Numbers are out. Came in lower than expected, so it looks like most people were wrong on the poll. Do you think we goes into a recession in the next year? Remember, a recession is defined specifically as 2 consecutive losing GDP quarters. Hey, hit that subscribe button, hit the notification bell. Again, we're at about 146,000 subscribers, guys. 146K. I appreciate the love. Thanks so much. Fun growth. Looking at our poll numbers, 60% of people think yes out of about 80 votes so far. 41% of people think no. Interesting. Again, we'll see. We'll see. Yeah, maybe Philip. All right, so again, the NASDAQ now technically red on the day. A lot of stuff's rejecting at these highs. The dollar index is pumping up. Gold is on the left. We can look at NVIDIA here. NVIDIA is very green all the way back up to 108s. So yeah, but I don't know if, so I think the real reason people are struggling, Jay, and I say this every day, but I think it's from inflation. Like, I think inflation is the problem. I think inflation is why people are really unhappy, and I think that's a little bit hidden. I think a lot of people don't understand it. I think that a lot of people look at economic strength or weakness in terms of how good or bad people are doing, right? And it's a little bit more vague than the actual technical definition. Like, just because people are doing bad, just because people are unable to afford things, does not mean we're in a recession. Right? A recession is 2 consecutive losing GDP quarters, which means that people are spending much less and working much less, right? And so in that regard, people are usually having an easier time finding jobs. They're spending certainly more than they were 5 or 6 years ago in general. And so I don't think we see those signs of a recession yet. And I think GDP is still pretty strong. Like, last time it showed up at over 3, right? Or 3% or something like that. And so I don't see those signs of a recession. At the same time, though, just to give you the other end of it, like the last unemployment report prior to this, a lot of people were worried about the SAHM signal. You know, the SAHM, the SAHM signal, which she actually came out and said she doesn't think we're going to get into a recession, but it's possible. You know, the SAHM signal, which means that, essentially, to put it in a nutshell, it means that unemployment spiked up 0.5% short term. And unemployment did, but it actually just now dropped back down to 4.2%, which would put us outside of the range of the SAHM unemployment recession indicator. And so I don't know. I think we're borderline, to be honest, right now. And I think nobody really knows. And I do think it's an election year. And so you want to take everything you hear with a grain of salt. Like, you got to understand election years so much. Everything's so weak. It's the end of the world. Better vote for our guy now. You know what I mean? Like, that happens so much that you do want to understand it's an election year. Generally, recessions do not fall on election years. Generally, the stock market ends green on election years as well. Right, and so everybody's saying it's doom and gloom into the world, you know, all that stuff. You have to understand the context. It is an election year. Now, anything could happen, but I don't know. Probability wise, I don't know. Thinking about moving to Texas due to the super affordable housing? I mean, you gotta understand it's like this though. Okay, so I live in Texas. There's no income tax, state income tax. So no tax for state. I should have put no state tax, right? But property taxes can be up to 3%. They can equal 2.5%, which is crazy. And so while houses are cheap, the real problem is that in order to sustain those houses, you're going to have to pay massive amounts of taxes here in Texas. And that's the problem. So like an example of this, you own a $500,000 house. I know in some areas where I live, it's like 2.2%. You're paying freaking 11 grand a year just in property taxes, right? That doesn't include utilities. It doesn't include insurance. It doesn't include maintenance. Just in pure property taxes alone. If you own $1 million house, right? People always say, oh, you can get and again, in Texas, the good thing is like you can get a little mini mansion for $1 million. Like for $1 million in Texas, you can get 4 acres with a beautiful 5-bedroom home on tons of acreage, right? For $1 million. The problem is, again, if you use that same, let's use 2.5%. You're paying $25,000 a year. Over 10 years in property taxes, you're going to spend $250K a quarter the value of that home in property taxes over a 10-year period. That's obscene. That's crazy. And so, yeah, I mean, Texas has no state income tax. You can get a lot of bang for your buck here in Texas in regards to like the size of the house you can get for the amount of money. It's not like New York or Cali, but the kicker is you got to pay tons of property tax, and that's high. Now you can find places that have less, but yeah. Yeah, I mean, honestly, it's both ways, Edward. So Edward says the inverted yield curve is the indicator of recession. It's both, right? So the yield curve inversion can signal it, and the uninversion can also signal it, right? In the end, again, recessions and market crashes are one of the most over-predicted things I ever see. Like, when if I'm trying to gauge how much somebody understands the stock market, I try to look at how often they predict stock market crashes. Right, if somebody's predicting a stock market crash every 6 months, they're usually pretty new. They're either new or they're really wrapped up in like political media, or they're super one-sided politically, or they missed out on some really big moves. But stock market crashes happen once every decade, but literally every 6 months, every year, every 3 months, really, when a big economic report comes out, everybody, like, I would say at least 20 people are telling me the stock market's about to crash, right? And again, it's no offense to them, but I do make a little mental note, hey, this person's probably new, because the market just doesn't crash that much. Yeah, 2022, you could argue it either way. Nobody knows. I mean, it depends on what your definition of a crash is. Or you might be talking about recessions, right? We did have 2 consecutive losing GDP quarters, but it didn't last long. And so if it was a recession, it was like a little mini one that didn't last very long. GDP picked up very quickly. Yeah, everybody wants to be Michael Burry, and I blame movies like The Big Short and The Big Short and Michael Burry. Everybody wants to be the next big contrarian that's correct. They want to be prodigy, guru, savant, trader that just knows something that nobody else does. It's human nature, right? Everybody wants to be that. But what this causes is this landscape of finance where everybody and their grandmother is predicting stock market crashes, and the people that really understand the market understand that we're not going to crash that much. Again, the other problem is you got influencers and YouTubers that they get more clicks when the market's like, more people tune in to watch a fire burn than to watch grass grow. You know what I mean? And so they get more clicks by telling people the market's going to crash every other week. And the real problem is, like, some of them are telling you every other week that the market's going to crash, it's going to burn, it's going to be the end of the world. And again, if you throw darts at a dartboard, eventually you're going to hit it, but it doesn't mean you're accurate. And I just see a lot of YouTubers with big followings just telling everybody always the market's always about to crash. And most of them haven't been wrong yet. You know, we've had slight downward action and red days and red weeks, but nothing even close to a market crash has happened. Even if we look at the Q relative to highs here, you know, the Q highs at 503 on the year, you know, I'm not saying that we've had perfect action, but even this drop right here in the markets from 500 down to 420, it happened over a longer period of time. This is probably just a little mini correction. A crash is like long-term, big, brutal 30+% drops. Or a crash is short-term, big, brutal 20-30% drops. A correction is a longer period. So it depends on what you define as it, I guess. Well, AI, it's an AI boom. It's a tech boom, right? So, yeah, it's just a big tech boom from AI. No, so a crash is a big and sudden dump like this, right? And now sometimes we rebound. It depends. Let me make sure I'm getting this right before I sound dumb. I thought crash was the one that, but okay, so yeah, so this is what I thought it was. So they can both be short-term or long-term, right? But a correction is like a 10% drop or more in a stock over its recent peaks. Corrections are typically short-term from a few weeks to a few months. A crash is more severe, 20% or more. Usually happens suddenly, right? And so a crash is kind of like boom, and a correction is kind of like, you know. And so that's kind of the difference. Correction is smaller term. Crash is larger term, of course. But yeah, while the crash itself is short term, occurring over a few days or weeks, its impact on markets can be felt longer. So both are temporary, short term. Correction is just small, like 10% drop. Crash is larger. And crash generally happens over days or a few weeks, but lasts, the bear market that follows it lasts longer, I guess is the point. Hey, thank you, AB. He said, recently found your channel, love watching your morning streams while catching up on my work. Hey, thanks so much, man. I appreciate you guys joining me. Yeah, but I mean, Kurt, so, you know, I hear people coming to me with this argument, and Kurt says the market's not actually up because of inflation. But inflation is a never-ending thing, man. So the market is up 100%. And if you don't hedge against inflation, inflation's inevitable. It's going to happen over a long period of time. Using inflation to gauge anything that has to do with the stock market, and like the stock market's 100% up, right? But inflation is rough, or was rough over the last few years, but the stock market's still 100% up. And again, like, even if we looked at your argument behind it, who said this? Kurt. Even if we look at your argument on it, your argument's wrong as well. No offense, it's all love. But the S&P 500 did 24% last year. 24%. Inflation last year at its peak was 10%, maybe less than that. I'll have to look at a CPI inflation graph, but it's nowhere near 24%, right? So regardless of which way you look at it, even if you look at it in terms of like we have to look at the net difference between inflation and the market gains, that's still wrong. No offense. But regardless, we can't use inflation to look at the stock market. Inflation, you have to look at everything else, but not the stock market. The stock market and the economy are different animals. And so you can look at the economy in terms of that stuff, but the stock market's different. would you say July was a crash? Here. I don't know. This is a longer period of time, right? So this is from July all the way to August. So a crash is usually shorter term, days or weeks. This is a correction for sure, a large correction in the market, percentage-wise, if you want to look at it. This is from, percentage-wise, this drop was 15%. So it wasn't a crash, it was a large correction, is what this was. Right, so this big move here, again, not a crash. A crash looks like this, right? A lot of people consider 2020 to be a crash. But I had a weekly chart I'd like to put up here. Alright, so if we put a weekly chart up, didn't I just create a weekly chart? There it is. So yeah, put a weekly chart up. A lot of people consider this to be a crash, which percentage-wise, we were at 409. We dropped all the way down to, let me do the math real quick. We already dropped down to 260. So again, a lot of people are going to consider this to be a crash because in this period of time, in 2021, we dropped in the NASDAQ here all the way from 410s down to 260s. Right, so that is a 36% drop. That's a crash in a following bear market. And then again, a lot of people think in 2020, a lot of people consider this a crash in 2020 on the NASDAQ. I'm going to look at the S&P. That's probably a little bit better look at it. But yeah, a lot of people consider 2020 crash to be real. In 2020, we crashed from 3,400 all the way down to 2,200. So that was a 35% drop short term in 2020. And so again, and this is my point, is that like the difference, the reason a lot of people don't necessarily consider this a crash is because we rebounded so quickly from it. Like we dropped all the way down and we didn't have a long-term bear market from it. So generally speaking, like we crashed 20-30%, we have a long-term bear market, and then it takes years to get back up and crashes. What you saw in 1987, it's what you saw in 2000, it's what you saw in 1929. But this one was kind of what we call a flash crash, which means that we crashed really big and then we immediately rebounded all the way back up. And again, that's kind of what happened. But again, like I'm saying, crashes don't happen all the time, Prior to that, we'd had pretty good movement. The last crash we had seen was 07, 08, and then we've basically been in a bull market since then. And again, people always acting like we're going to hit a crash every other week. Like we've already had two things that could be considered market crashes in the last 6 years. So does that mean that we're probable to crash again? I don't necessarily think so. Although I do think that with AI movements, like I think with AI being up as much as it is, it's possible. I'm not saying it's necessarily probable, but it is possible. And so again, I don't know. I think if we do have a crash, like in 2000, we had the .com bust crash, like the .com crash. And the internet was the next big thing. The internet was huge. When you fast forward 20 years, the internet's super influential of a technology that we're still using, obviously, and that's growing and growing. But back then, we still crashed and had a long-term bear market from it. And I say this every day so people understand it. And again, that's possible here as well. And AI might be that next big thing, but it doesn't mean we're not going to crash. Doesn't mean we will either. We'll have to wait and see. But yeah. I think that's the way you got to look at it. And the best way to hedge against all of this is just invest. Invest. You can buy gold. Diversify. I think it's more dangerous to lose money to inflation over time than lose money to crashes. And I'm gonna give this, guys. So if you don't understand, if you're one of those people that are so afraid of crashes that you sit on cash and you never invest your money, you're losing so much money to inflation. Let's say inflation grows at 2.5% every year. Say you got $1 million. Right, I showed my wife this formula yesterday because my wife had some investments, and she wanted to see how much she would have when she retires in 30 years, right? And again, her portfolio was growing at like 1% a year or something, and I told her, I was like, that's nothing. I was like, if you're holding something for the next 30 years, stick it in the market, buy the S&P, the NASDAQ, diversify into gold, buy some bonds with it. Like, you're gonna earn more than 1% yearly. That's nothing. You can buy that, you can get that in treasury bonds and CDs. You get 5x that. But what I showed her, the formula that really made her understand it, is because she was like, oh, well, we're going to have this amount of money in 30 years. That's great. I'm going to have plenty of money. And I showed her, I was like, in 30 years, that amount of money is going to be nothing. Like, I'm just going to use $1 million. I'm not going to tell you how much it was because it's not this much. But I'm going to use this as an example so people understand. Let's say you got $1 million in 30 years from now, right? And you might think investing this money and to have $1 million in 30 years is some super good thing. But watch the difference, right? $1 million, let's see how much $1 million in 30 years is going to be in buying power today. So let's say we grow let's say we have a relatively conservative inflation estimate of 2.5%, right? So we multiply this times 0.975. That's taking away 2.5% a year, which is inflation, 2.5% a year, which is conservative. Might be more than this, to be honest. All right, now if we look at it over a 30-year period, let's do it in 10-year increments. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, you're going to lose basically a quarter of that money's buying power. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 20 years, you're going to lose another huge chunk of that buying power. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And so $1 million in 30 years is going to be the equivalent of about $467,000 today. And so it's going to be less than half of that value. And this is the mistake a lot of people make, is they say, hey, if I keep investing X amount of money for 10 or 20 years, I'm going to have $1 million in 20 or 30 years. But what they don't tell you is that that's not going to be anything. That'll be a very small amount of money at the time. And so if you don't invest your money to hedge against this type of thing, you are going to lose boatloads of money over time. And so I get it. People are afraid of stock market crashes. I get people afraid of investing their money in the stock market. The stock market, number one, is incredibly consistent long term, which means that on average, over a century of data, the S&P grows about 10% a year, which means you're going to make on average about 10% every year. Not every year, but on average each year. And that includes crashes, corrections, red action, bear years, bear decades. That includes all of that stuff. You're still going to make 10% on average, because on good years like last year, you made 24%. And so you can buy bonds and make 5% a year, guaranteed by the U.S. government. There's a lot of ways to hedge your money, but if you don't invest in anything, you are losing money over time. And that's what a lot of people don't understand. A lot of people say, oh, well, if I do this and this, I'll have $2 million by the time I retire. It's like, yeah, but $2 million is not going to be anything. It's going to be much less money. You probably won't even be able to buy a house for that much money in that period of time. So like, it's not going to be anything. So again, invest. If you're long-term invest, I'm not going to tell you it's guaranteed. Nothing's guaranteed. There's always risks. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. I have no idea what I'm talking about. But that's the real formula. And you will lose money over time if you don't invest. You can invest in real estate to hedge against that inflation. Real estate will pay you about 5% average appreciation over time annually, as well as cash flow if it's a rental property. So you can invest in real estate. You can invest in gold. Gold has 7.5x'd over the last 25 years. It's gone up 7 times its value in 25 years. The S&P 500 has gone up about what, like 4.5, maybe higher than that now, 5x in the last 25 years. Long-term markets are very consistent, and it's very easy to make money long-term over decades. It's always risky short-term over a year or two. Anything could happen. You could crash. The only people that shouldn't listen to this is people who need the money soon. If you imminently need to take your retirement out of your 401k or whatever, then it might not be a wise idea to invest, because anything can happen short-term, and you don't want to get stuck in a crash and then be stuck, But if you look at it over decades, it's very consistent. Yeah, the people that do the worst in market crashes are people that get emotional and sell. I say that every day. People who do the best are people that are opportunistic and jump on some of those cheap deals and properties. Is Tesla going up when the market opens? I don't know. Will Jerome Powell walk outside and stub his left toe at 8:30 Pacific time tomorrow? I don't freaking know, man. I have no idea, guys. I have genuinely no idea. Nobody else does either. It's not like somebody's like they got a 50-50 shot of being right. But if you're asking me if Tesla goes up at the opening bell, I have no idea. I hope it does, but it doesn't mean it's going to. And anybody that claims to be able to predict that is just feeding you nonsense. So be resilient to that, please. Yes, Powell will. Okay, good. Puts on his big toe. I have 5 minute, 1 minute. You use them on. I use them on all time frames, to be honest. Regarding the 200 EMA, I use them on short term as well. You might think it's a longer term moving average, so you can't use it long term. I love the 200 EMA. Like again, here's a great example of this, right? So the S&P 500, the 200 EMA is right here, right? And so what does this show? This shows that the 200 EMA bounced support off of this level, confirmed the upward trend that we got all morning, and then when we finally broke underneath it, it signaled a very clear trend change, and the market ended up moving down and doing well. So yeah. John the Human Almanac. Hey, my son and I have been watching Project Almanac, the movie. My son's turning into a tech nerd, and I love it. I really do. He likes drones. He likes tech. He likes computers. A lot like I was as a kid. I was into nerdy tech stuff as a kid, too. I was into Game Boy emulators and ROMs. I would download the Pokemon emulators and ROMs and play all the games before they came out. And, yeah. Had my own computer. Would create. I remember I had a Legend of Zelda Ocarina of Time fan page, walkthrough page, where I would create walkthroughs on the Legend of Zelda Ocarina of Time as a kid. Freaking loved it, I had websites too. I had my own websites when I was like 11. Yeah. It was back in the day when it was still relatively like young and new. Yeah, all good. Yeah. Do you think 401ks are obsolete? Yeah, I mean, I think it's hard to tell. I think that 1% to 2% is nothing over a long period of time. And so I think it's risky. All right, guys, here's the opening bell. We got 20 seconds. 20 seconds. All right, we're going to be day trading on Top Step X today. I'm going to pull this up. I'm going to put gold up and NVIDIA to see where those two go. There's the opening bell, guys. We're going to try to slow it down. We're already up a couple bucks on the day already. How do I want to add this. There's got to be a way to add this to the platform. Alright, I'll just play it like this. Alright, so there's the micro NASDAQ. NASDAQ is pushing up a little bit here. Very flat last 20 minutes or so. We got to watch NVIDIA also here. And again, I'm trading on Top Step funded account program and futures. Genuinely so much edge because there's no commissions on Top Step X. And so it's literally one of the best things in funding right now. No commission. I can trade for very small amounts of fees per trade. It's like 74 cents with micro. So I can scalp with micro contracts with tiny size, make 20, 30 bucks a trade, roll up hundreds of profit on the day. on good days and limit my risk on bad days. Instead of trading the NASDAQ, which can go up and down huge percentages, you can lose thousands of dollars in minutes on the NASDAQ, especially with more than one contract. I can trade micros, which is much smaller size, and there's almost no commission, so I can actually let my edge play out. Again, Top Step gives you a demo. They test your skill with a demo. If you pass the test, they fund you. If you fail, you only lose what you pay for it. The base one's $49. Again, it's literally the best opportunity in funding right now, in my opinion. They're an affiliate of mine. They pay me money. I'm biased, though. We're going to let the opening bell play out. Again, understand CFTC 4.41 hypothetical or simulated performance have limitations. I might have no idea what I'm talking about and be wildly wrong about anything and everything I say. Don't copy me. I'm not an investment professional. I have no idea anything about everything in the market. I'm not liable if you lose money. I do trade off stream. They are an affiliate of mine. They pay me money. I'm biased. Check out the link right there. What's your opinion about unrealized cap gains? I think it's the worst idea you could ever have. And if you trade stocks, you should too. I think a lot of people justify it, but I don't know. Like, I know people are really critical, but it's also specifically only for people with high income, you know, so it's only for like the wealthy, I think. But I also think that it opens up a lot of problems that people don't understand. You know, if you let people get taxed on unrealized gains, you have to let them write off unrealized losses, which is going to open the door to massive amounts of fraud and manipulation. By big money, right? So if you think it's going to help solve big money problems, it's going to make them 10 times worse if you let people starting write off unrealized losses. You know how easy it's going to be for some of these big banks and hedge funds to maneuver their money to look like they have all these massive unrealized losses, so they pay even less taxes. In that it's just a horrible idea. Yeah, it's just not a good idea. Yeah, definitely top 3-ish worst and best ever in the world. Yeah, I mean, Christian, I'm talking about what was recommended, was specifically for, like, watch. Like, so, I saw somebody explaining it. Again, I'm not saying I agree or disagree with it. I'm not really a big politics guy at all, right? So I am very neutral politically. I don't like any of them. And I try to just avoid what I can with that type of stuff. But like an example of this, hold on, let me find it. Sorry, I'm picking up my foot here. Hold on. Yeah, I can't find it. Yeah, so it was. I think they're targeting big time CEOs. Again, I'm not really. I don't really pick a side. Honestly, the market's very flat right now. None of this looks good. Gold's coming back down though. Nvidia's choppy, and it is Friday. Yeah, so the proposed tax on unrealized gains. With people with a net wealth of over 100 million to pay a minimum tax on their unrealized gains from assets such as stock, bonds, or companies. Yeah, again, I tend to think it's a bad idea, because it makes it too much. It makes it's going to confuse everything and just make everything much worse. All right, so I'm going to buy this. We got micro contracts here. I'm going to add a little bit to it. Now we got a little bit of cushion on the day. See if we pump back up. I was trying to target Nvidia hitting the 200 EMA, but now it looks like I'm down on the day. I'm gonna try to add to this, see if I can fix it, but I also got to be ready to cut this very quickly too. We're right at a big support level. We cracked this low, I got to get out. We've tried, but yeah, we got to cut it. So now we're down, I think we're probably down about $100 on the day, and that's a big red drop. You know, I'll switch it to something else, but that's a big red drop. You know, who knows how long this will last. Yeah, I'm gonna see if I can switch it to something else. Yeah, so I am down right now. $100 basically on the day, about $100. Again, the market's down a lot too. See if I can make my money back and grind it back. Yeah, I'll put this up. Yeah, it's a big turn. I'm just gonna wait, guys. It's Friday. I don't want to give too much back to the market, and so I'm gonna wait until we have a little bit better setup. I usually like these big downward moves, but payroll data did come in light, and we could have a delayed reaction to it. All right, so I'm gonna try this. All right, so I'm gonna cut that. All right, so we are now we made another $25 back. We'll try to grind our moves back up. $200 loss is my max loss on the day, though. I'm not going to lose more than that. We were green in this account to start the day. What a big drop. Look at that in Nvidia. We start to add back to this now. Two contracts. We're not going to take more than two. We got to keep our losses small. Alright, so we took one contract off. We might actually add it right back. We're running into previous support level, which could be a good spot for it, but again, I'm not going to give too much back to the market today, I think. We're going to try to go into green and then maybe add to a winning position instead of a losing one. I wanted to add more there too. Okay, we did add more. All right, so we just made another $60, catching that bottom here. Let me see what we're down on the day now. Okay, so we're down like $70, so we're basically flat. I'm gonna try to grind our profits back. I'm gonna add into this. I like that fill. We can keep it one contract now. Flat on this one. Add to it, see if we can average in a little bit here, but two contracts right now. Man, look at these swings. Nvidia's at 105s, which is what I'm trying to play off of here. Oof. I got three contracts. What a brutal market. Alright, so somehow we got out for a very small loss there of like $70, but we're getting kind of close. I'm going to take a couple more trades. And that's about it. I'm going to try to let small size play this out too. I don't want to take large size here. It's too risky. Nvidia's still flushing down pretty big. I will add to this trade now. We just took a little bit more profit off there. Took some more off. All right, so we got a nice little string of trades there. We made about $70 right back. So again, we're back close to break even here, I think. I'm sorry, I keep checking this. I'm trading, yes, so we're back to exactly where we were. We're basically completely flat. I'm gonna pivot to a short-based trading now. All right, so we just made another $20 there. And this is the good thing, is I can scalp like this with small size without taking a ton of risk with zero commission. Yeah, so if you're only poking out trying to criticize me when I lose money, especially if you're criticizing the direction that I'm taking, like, look, there's the big bounce that we were looking for. But in the end, I know what I'm doing. Like I said, I'm green in this account. You know, you got some people that only show up when we start to lose, and then they start to act like experts or whatever. But again, respectfully, here, I'm going to start shorting this now. If you're one of those people that pop out only when we lose, you're going to get banned pretty quickly. Just a heads up. All right, so we made another 20 something right there. I'm going to let it sit now, though. We're basically flat on the day. We've got a couple good green trades in a row. Yeah. Everybody's an expert in hindsight, for sure. Spy's starting to head back up. I don't know if I want to short it either up here, though. I kind of think it's short biased, but I also think that we could come all the way back up. Nvidia hit 105s, though, which is kind of a weak thing. All right, I'm going to try shorting it. Small size, though. Very small contract. And that way I can let it work a little bit more and try to just kind of scalp this back. If we drop enough, I'll add to a winning position. Only if we drop enough, though. Okay, I'm going to add to that now. All right, we took half off. There we go. Just made another 35, 40 bucks. Yeah, 100%, Chris. Yeah, like I said, you got some people, like, again, we got some people that are just weird. Typically, they're people that have been banned before that for whatever reason they have like an unhealthy obsession with the channel. You know, and again, maybe it's therapy for them. You know, they can let it out. It's okay. I'll be all right. Again, I'm trading small enough, and the good thing about Top Step is that there's no commissions, right? So I can trade very small, and if I lose $100 or $200 on the day, it's pretty small. And we're green in this account right now, so like we're doing good. My whole mentality is gonna try to be slow and methodical with profits. I don't need to get rich. You know, I don't really even need to get funded in any of these accounts, to be honest. You guys know that, but we're still trying to grow. Yeah, so the report's already out. Data came in right here. I don't think we have anything else. We have Waller speaking at 11. But that's basically it for the week. Yeah, so there goes the big downward pressure. I'm watching Nvidia a lot. No, we don't have PMI at 10. There's Canadian PMI, but that's insignificant. Yeah, so we don't have anything at 10 really. All right, so we're looking at Nvidia start to bounce up here. I'm gonna short this. Again, we're gonna take the same mentality where we take a position. If we get really green in said position, we can do this like we just did and scalp another 30 bucks. We might be green on the day now. Let me see. We are green. Hey, we went all the way back in green on the day. Cheers to me, man. And this is why zero commission trading makes sense. And so again, like this is the problem with chat sometimes, is that as I start to buy here, right? What do you see the chat say? They say, "Why are you buying there, bro? What are you doing, dude? Why are you buying right there, guys? Why are you buying?" And again, I might have managed it incorrectly, but we were absolutely right. The reason we're buying is because this type of bounce is pretty probable, you know. And then again, once we get up to the top, that's when I pivot to a more short-based strategy. Why? Because we got a bunch of resistance here, you know, and Nvidia is what I'm really looking at. Nvidia is right underneath the 200 EMA volume weighted average price level, a milestone level. So if it can't break that, what's going to happen? It's going to come back down and test lows maybe. I don't know. I'm not saying it will. I'm just saying, you know, that's my thesis on the trade. It doesn't mean it's right. Okay. Again, I'm not telling you to do anything. I have no idea what's going to happen. But that's why I went long and then I pivoted to short. The best financial advice I could ever give in the world is don't copy me. I'm not an investment professional, and this is not investment advice. And so I guess in a nutshell, the best investment I could ever give the world, top 3 investment advice in the world, is that this is not investment advice. If it was, it would be top 3 though. And there's the market coming back down as I suggested it might. It doesn't mean it's going to hold though. Again, watch Nvidia. This is a milestone level right here. This 200 EMA VWAP level, that's a milestone level. So that's what you want to pay attention to. We're getting really close to 146,000 subscribers, so I appreciate the love. We got over 15,000 views for this stream. Thanks so much, chat. Genuinely appreciate all the love. It's been fun to watch the channel grow. And there's we coming back down again. Very predictable. Yeah, very predictable. All right, guys, I'm going to get out of here for the day and just enjoy my weekend, man. Y'all have a safe and happy weekend. Y'all be good. We'll be back tomorrow. Next week is CPI inflation data week, a massive report. This Wednesday and Thursday, I believe, is when inflation data drops. PPI and CPI inflation data. So it's a massively relevant week. And then the week after that's the Fed decision week, the rate cut potential week, the big week, guys. And so, again, if you haven't already, hit the subscribe button, hit the notification bell. Again, Top Step, the edge with no commissions is absolutely huge. It's genuinely powerful, usable, predictable, or not predictable. It's genuinely powerful and usable to scalp micro futures. Instead of having to trade the regular NASDAQ or the E-mini, I can trade micros, no commissions, small amount of fees per trade. I can get into these small, you know, I was down $200 at one point. But again, like, look at this, right? So, like, check out my little run here. So we went from being down that to just putting in this massive run of green trades with small size, 74 cent fees per trade, $6, $20, $11, $24, $22, $19, $15, $30, $24. Like, I can get into these little bitty trades and they add up and I can go green. And so I can limit my risk. It's a powerful thing. If you want to check out Top Step, again, they're an affiliate of mine. I'm biased. They pay me money. Understand CFTC 4.41, hypothetical or simulated performance, have limitations. I do trade off stream. You're not going to see all my trades. I'm not even claiming to be a good trader. But if you want to check it out, there's the link. Appreciate the love. And again, I'm going to get out of here. And again, y'all have a safe and happy weekend. I love you all. Y'all hit that subscribe button. I'll be back next week. CPI week. Y'all be good.